I think Tencent is interesting to look at through a Naspers lens.
Yeah.
Through the Prosus Naspers lens. I think that's a good lens to look, because you get a good discount if you go through from there.
Do you own Naspers as well?
I cannot comment on things that not in the public domain. I like Naspers.
But you like Naspers, yeah.
I like Naspers. I think Baba and Tencent are similar, but they're also very different.
So to give you some background on today's video, we're going to be looking at a way to get exposure to one of the world's best technology companies at a heavily discounted price, at least relative to how much the asset is selling for on the open market. And the asset in question is Tencent. The vehicle that allows you to make this alternative purchase of Tencent is a South African-based company called Naspers. Now, just before we dig into Naspers, I've previously done a video on Tencent which analysed the business and all of its parts, as well as gave an estimated fair value to buy the stock today. So I'd suggest going and watching that at some point if you're interested in Tencent, because the good news is that I was showing Tencent as undervalued based off a 5-year DCF and sum of parts analysis. And in that video, I did mention another way to get exposure to Tencent at a lower price than what it's selling for on the open market. And that's what we're going to talk about today. This was originally brought to my attention by Mohnish Pabrai, who spoke at length about 1, how good of a business Tencent was, and 2, how undervalued it is if you account for all of the segments of their business and the potential for growth. But he also mentioned that he preferred to look at Tencent through a Naspers lens, because of the significant discount that you receive by owning Tencent indirectly, but still benefiting from its value increasing over time through purchasing Naspers. And so, what is Naspers, and how do you essentially own a stake in Tencent through owning Naspers? Well, Naspers is a South African-based consumer internet company that acts more as a venture capital or investment holdings firm than an operating business, so it needs to be analysed as such. And they purchased a 46% stake in Tencent for $34 million back in 2001. That investment is now a 31% ownership of Tencent, but it's worth over $240 billion today, making it one of the greatest investments on record. But we can't talk about Naspers without mentioning Prosus, and this is because back in 2019, Naspers transferred all of its international portfolio, including its Tencent holding, to Prosus, and then Prosus was listed on the Euronext stock exchange in an effort to unlock trapped value for Naspers shareholders. Naspers was then left with all of these South African assets, being South Africa's largest e-commerce and media brands, and then but also a 74% stake in Prosus and its listed shares. And this has since changed, though, in another refreshed effort to reduce the discount to net asset value that exists in both companies by offering a shares swap to shareholders that restructures both companies' ownership. And essentially what this has meant is Naspers shareholders now own 57% of Prosus, with Prosus purchasing 49.5% of Naspers through a new form of share structure, which meant Naspers shares were transferred to Prosus shares. So if you were a Naspers shareholder, essentially you were given Prosus shares in exchange for what you had currently, and Naspers retains ultimate control over Prosus in this arrangement and is the majority shareholder, but Prosus now has a market cap larger than Naspers. So if this seems confusing at face value, it's because it is, but the reason for Naspers doing this is pretty simple and well justified in my opinion. It's just the execution probably could have been better. But like I said at the start, the core of this is that Naspers and Prosus trade at lower than the value of their Tencent stake alone. And that's without accounting for any of the other billion-dollar businesses they own across the globe and also their operating businesses. And although discounts to net asset value in investment holdings companies are very common and almost guaranteed in some cases, it's quite rare that you see such a large gap, or the gap that we were seeing, such as the one with Naspers, especially when the bulk of the value is coming from such a high quality and desirable asset in Tencent. But essentially what Naspers and analysts believed was creating a large discount to the net asset value was Naspers' size relative to the stock market exchange it's listed on. That exchange is the Johannesburg Stock Exchange, and Naspers made up 24% of the entire float of that stock exchange, which is a huge amount, and it caused problems for domestic funds, domestic investors who had concentration rules for their portfolio, essentially meaning that anytime Naspers stock price increased or the value increased, most funds had to sell shares to satisfy their concentration risk, and this created a real anchor effect on the stock price and market cap of the company. So now this solution of transferring over to Prosus or listing Prosus in Europe and essentially transferring all of the international assets to Prosus means that the Naspers total float decreases and the Prosus float increases, which allows for less concentration issues in South Africa and allows for more international and European investors to purchase more shares of Prosus where they might not necessarily have had access to South Africa beforehand. And this should in turn benefit the Naspers shareholders. And so with that introduction and explanation of the current situation over, let's look at a sum of parts valuation for Prosus and Naspers to determine how far off an estimated fair value we are for this company, and if it's worth us skipping Tencent's direct listing and buying through Naspers or Prosus to get a better discount. And FYI, a discounted cash flow analysis or DCF that we usually do, or earnings model maybe, won't be applicable here because it operates as a holdings company looking for capital appreciation as their means of value rather than operating cash flow. So we're going with a sum of parts analysis, and this is what I've managed to untangle so far. And I will say there may be some discrepancies here as the cross-share arrangement that Naspers are proposing may change the economic interest for both companies in the underlying assets. So just be aware, maybe do some research yourself after this video and see what you come up with. But we're going to start with Prosus, which owns the international assets and therefore Tencent. So I've taken the current market value of all of the public companies that you can see here. It's pretty easy with these ones because the net asset value is essentially just the price that the market is willing to pay for them at the moment. And you can see Tencent makes up the vast majority of this, being worth around 205 billion currently with their current ownership. They've also got Delivery Hero, Mail.ru and Trip.com, which are public companies based internationally, and they make up close to around 10 billion collectively. But we also have some other private companies as well. And I've taken Prosus's estimation of the net asset value of these assets, which is around about 52.3 billion. Essentially, they did a presentation where they said the total net asset value was 268 billion, and I know that this is the current value of those public companies here. So all I've done is just deduct the rest to get the value of the all other private companies. Now, it could be more than this, it could be less, because we don't know exactly what they're using, what method they're using to value these companies. But as you can see, the total net asset value gets us to around 268 billion. And with the current market cap in US dollars for Prosus being around 150 billion, then that means we're getting a discount to the net asset value of around 44%. And actually, even the market cap of Prosus is significantly lower than just the 10-cent stake. So this is something that obviously flags an inefficiency in the way that they're pricing these assets here. But there is obviously that complexity element as well, and that may be what people are trying to figure out. So if we move on to Naspers now and look at their share of the net asset value and maybe what sort of discount they're trading at, you can see that the discount's a little bit heavier, and this is going to be the case because Naspers is the ultimate controlling company, or ultimate holding company, so they're almost trading at a discount to the discount. But what I've done here is I've taken Naspers' effective 57.2% ownership of the Prosus shares, which accounts for around 153 billion of the net asset value. I'm taking that out of. And then I've got Naspers' operating revenue for their South African businesses, which is around about 5.9 billion in US dollars. So I'm just taking it at 1 times that operating revenue, although it probably would be more than that. And then we have the current market cap of Naspers, which is around 86 billion. So again, a significant discount to those net asset values. I wouldn't call it intrinsic values because that's not what it is. This is the net asset value, just the value of the assets, what we think people would be willing to pay for them if they were divested individually. So you can see significant discounts to net asset values for both Prosus and Naspers. Now, to summarize and just give you my thoughts here, I don't want to lose sight of the reason why we're looking at Prosus and Naspers in the first place, and that really is that Tencent holding, that investment that they made into Tencent that's now worth 205 billion US dollars. And in the contrast that you can buy the Prosus company, or the Prosus holding company, for 149 billion, therefore getting a discount on the Tencent stake alone. So if we look at what the discount is to that Tencent holding, it's around 27%. And to give you an idea of the power of this holding, or the power of having all of these assets and having a big discount to net asset value, well, just look at what they're looking to do with buybacks at the moment. So if I change this down to around 2.5%, which they've divested, they're putting 5 billion into buybacks next year, just to try and see through this next phase of the transaction, and this next phase of the restructuring, and try and make it a bit more of a smooth ride. So that, just in that one divested stake, is around 3.4% return to shareholders, and they could do much more than that with the amount of liquid assets they have on their balance sheet. But back to the Tencent holding. So with the Tencent holding alone, we're getting a 27% discount to what it's currently worth on the public markets. So if we go into our Tencent valuation, here's the 5-year DCF that I did for Tencent if you haven't seen it. What I'm doing here is I'm just calculating the Prosus equivalent, right, to how much we're paying for that Tencent stake at a 27% discount to what it's currently worth buying through the Prosus holding company. And it's essentially the equivalent to buying Tencent at $52 per share today, when I think it's worth around $85 per share based off of its intrinsic value of the operating business and the portfolio that it holds. And so that gives us around about a 39% margin of safety or discount to the value of Tencent, which is quite significant, I do have to say. But so what I'm still considering here is I'm trying to find out more about the Prosus and Naspers shareholder structures, see if there's anything that I'm missing here. I do want to buy Tencent, and I do want exposure to Tencent, and that's what Prosus or Naspers can give me. I just need to do a little bit more digging. If I think it's probably too complex, or there's too much maybe risk and uncertainty involved, then I'll probably just end up buying Tencent directly anyway, because I think it's a company that's selling below its estimated fair value. But let me know in the comments what you think of Prosus and Naspers. Hopefully, if you hadn't heard of them already, this was a good insight into both Naspers and Prosus, the backstory, and why Mohnish Pabrai specifically is very bullish on Tencent, but through a Naspers lens. I will leave the valuation model to Tencent and this sum of parts valuation on the Patreon, so go and check that out if you're interested. There's also a load of other benefits as well. But even if you don't do that, if you could leave a like on the video, I'd really appreciate that. Subscribe to the channel if you haven't already. I will see you all in the next video. Good luck with all of your investments.